Investors and traders, welcome to the channel Market Chart Pattern. Today is 12th of January 2024, and I hope everyone is having a great day. In this video, we are going to take a look at the key US banking stocks. We'll also take a look at the ETFs such as XLF, and we'll start with the KRE, which is the regional banking ETF. This video is for educational purposes only, and it's not a financial advice, and it's about technical analysis. Okay, so at the last week, during the last week of December 2023, last year, we had done the video in which we did a recap of the key financial stocks and ETFs for the US market, and now it's a recap of that. Now, while I was preparing for this video and I was going through the charts for the US banks, the major ones, and also for these ETFs, I couldn't really help think that so many of these pattern formations, they are being completed, or the price is really at those levels, and some of these banks have started to actually give their earnings out, and some of those results, such as for JP Morgan, which we'll be taking a look at, and also the Bank of America, those results are out, and it'll be interesting to see how the price actually reacted for those. So the interesting situation is that a lot of these patterns that we were actually looking at while we did the video about 3 weeks ago, a couple of weeks ago at least, those patterns are still working, and just really interesting to see that so many of these patterns are actually being completed. So as you will see during the video as well. We'll start. Let's start with the KRE. This is the S&P Regional Banking ETF, and this is the weekly chart we are looking at. This is the index which has the small regional banks. If you remember last year, during the first quarter, we had the Silicon Valley Bank, which actually collapsed. And it was part of this index, and this index had been going down. You can see that since January of 2022, that's when it topped, and it's just been going down and down. So just really clearly showed that the regional banks were coming under stress, and it was also because of the actions of Federal Reserve increasing the interest rates, and these are smaller banks which do not have as strong a balance sheet as some of these major banks. So finally, the Silicon Valley Bank unfortunately went under, and its assets were bought by JP Morgan in the United States, and I believe it was HSBC in the United Kingdom, but you can Google about it. If I hope I did not get my facts wrong. Okay, so what we are looking at is we have this completed ABCD pattern, which is shown in this purple line here, and it's just a one-to-one price projection of this swing. So you can call this swing AB. You projected for point C, which was the exact 78.6% Fibonacci retracement, and we get to this level. And here, right about close to this, we have the 38.2% Fibonacci retracement coming in from these highs to these lows. And whenever we have a confluence of two or more patterns and ratios coming together, something always strong about that level, and this is what we have seen. And also we have the 1.272 Fibonacci expansion of this BC swing as well, right coming around that level. And what we have seen over the course of 1, 2, 3, 4, and this was the fifth week here, 5 weeks, the price has just gone nowhere, and it's just been consolidating and then moving lower, in fact. And if the price begins to move, take this swing low out, which is around 48.30, yeah, the chances are that it's gonna go at least actually right to about 20-week moving average, which is on this purple line. And now let's take a look at also the XLF. So this is the weekly chart of the XLF, which is Spider Select Sector Fund Financials. And here again, we have this ABCD completed pattern here. And what the price has done is it's just gone to that level, and it is just consolidating there. And in fact, this week it closed lower, and it's been a bearish candle, or a bearish trending candle for this week, so something we need to pay attention to. And the price has been just hovering above the 61.8% Fibonacci retracement, and we have this pattern ABCD completed on this one as well. If we just take a look at this on the the daily chart, we can see a really nice rally which took place from the end of October 2023, and that's when the major stock market indices actually also began to move higher. And just before, a little before the week of 27th of October, ending 27th of October 2023, the bonds are also starting to rally, and we have seen a fantastic rally in the stock indices and also in the financials. The financials were kind of leading in the sense that they had been really weak, and here something changed and they just began to rally like really crazy. And now if the financials begin to come under stress, and then perhaps that will also begin to get reflected in the major stock indices. So this is something which we need to keep an eye on, and this is why this analysis for this week for the financials is also very important to take a look at. Now let's take a look at some of the major banks. Let's start with JP Morgan, because this is the one which came out with its earnings today, and this is the weekly chart for JP Morgan, and we have this one-to-one price projection ABCD pattern completing right here. And what we can see is, if we move to the left hand side, we have a top here, and look at the weekly candle here. The price actually took this high out, but it did not close higher. In fact, it's closed lower, so that's a bearish candle, and that's on a weekly chart. And we have a one-to-one price projection ABCD completing right here, and we have a structural resistance coming from the left hand side. Now on a weekly basis, if the market begins to close lower, taking out these lows, that's not gonna be really good for the stock. But JP Morgan, as we know, is a fantastic company which has done really well as one of the stronger banks in the banking group in the United States. And if we just want to also draw your attention to this, in JP Morgan, we have this really nice, really long-term trend line which has been actually going on since 2009, the great financial crisis bottom. And look at this amazing line. Every time the market goes and touch this line, it just rebounds. The stock has done amazingly well. So what it could mean is that perhaps there's going to be some sort of a retracement, a pullback which might be in play. And of course, look at this rally. It has been going up for so many weeks without any correction at all, so maybe a pullback is kind of due. So this is something really we want to pay attention to, and we'll also be paying attention to, especially on daily charts, the price action. If we are going to see some sort of a sell-off which is really quick, kind of a little bit aggressive, that might tell us a few things. And look at when the market had topped, or the stock had topped in October, it was a fair, quite a bit of a sell-off in the stock. Now let's take a look at Goldman Sachs. So this is the weekly chart for Goldman Sachs, and we can see the Goldman Sachs has also done quite well since late October 2023. And here the interesting thing is that this rally is actually equal to the rally which had taken from here, you can say 26th of September 2022 to sometime 14th of November. Really quick rally, few weeks in here. We have a similar kind of price action, a really quick rally, a few weeks in here in time wise, and same kind of magnitude. And the stock seems to be finding resistance also from the structural high here, so maybe it could be a potential double top. What the price did try to do is it has actually taken out the lows of last week, but it is still it hasn't taken the about 374 level out. So again, this is what we are watching. If the Goldman Sachs, another big financial firm, also the price begins to come under pressure, this will get reflected in the stock indices, especially the Dow Jones, where Goldman Sachs is a component. And also the Dow Jones is one of those indices which is actually price weighted. It's not cap weighted, which means that stocks which are quite higher priced, their movement really impacts the index quite a lot. Now let's take a look at this on the daily chart. So the daily chart actually looks quite busy, because we were following this really closely for quite a while. And in fact, the long-term subscribers will know we had drawn this blue pattern formation long time ago. And in fact, this is what we were looking at, that perhaps this is where this stock was heading to, and we had really strong support here, but quite a few things changed end of October 2023. And what we have seen is pretty strong rally, but in my opinion, this pattern is kind of still valid because it really needs to get above this and take these resistance levels up here out around 395 level or so. So again, something to keep an eye on. From this level moving to about $100 or more, you know, it looks something we will only time will tell what is going to happen. Now let's take a look at Bank of America. So here, this is the weekly chart of Bank of America. If you guys recall, I've done a weekly video and I've shown a really long-term cycles for the Bank of America. And here the stock is actually pulled back a little bit. And this is the region or the zone that we were watching. That's also mentioned in that video, where some resistance could come in, and a pullback right to this 38.2% Fibonacci retracement is possible. And now I think the stock also came up with earnings. The revenue side was a little bit disappointing, and the market has reflected that in the price action. Now let's take a look at Morgan Stanley. So the Morgan Stanley stock, it actually had been one of the better ones, and it had a really strong rally. But again, right from the 78.6% Fibonacci retracement, it is finding resistance here. One of the longer term patterns have been this ABCD, which can in fact see the stock perhaps on a worst case scenario move to about $60 per share level, and on the daily we were watching for, there was a this gap from 21st of December 2020, which is left open, and that might also be a potential area where the stock might be actually moving to. Let's now finally, last but not the least, we'll take a look at the Wells Fargo. So here we go. So the Wells Fargo had done a really interesting pattern formation highlighted in this blue. This is where it's right at the 61.8% Fibonacci retracement. It's also done a 1-to-1 price projection ABCD, and look, the price action has been really violent, and it's just been moving lower. So again, that was a bearish pattern formation, and this price action is actually not surprising. And if you remember the video that we had done, we had mentioned about this pattern formation. I believe that video was done on the 28th of December 2023, and I'll put a link to that. It'll be really interesting to actually watch that and see how these patterns unfolded, and what we were trying to forecast in advance. And this is the weekly chart. It's showing a similar kind of picture, and we can see a not a very good looking weekly candle which just closed in a bear candle formation. So that's what we are looking at in the financial stocks. I wish you a fantastic weekend, and with the holiday coming up for Monday, I believe the markets will have restricted hours, and I wish you guys a fantastic weekend. And if you like our analysis or how we look at the markets technically, please do think about subscribing, and thank you very much. Good luck and good trading.